Good morning. Good morning. Hopefully, you're having a fantastic day today. We have a little bit of technical issues here. I can't see my stream. I can't see the chat, I should say. So we're gonna try to work around. I'm gonna pull up. I'm gonna pull up my chat on YouTube here. So give me a minute or two. We're gonna be getting started. We have news at 10 o'clock. So we're not trading before 10, same as yesterday. Yes, there was a fantastic move yesterday before news, and we missed it. And we're going to maintain that same posture again. We got to maintain it. We got to protect ourselves from any type of craziness that news brings. Now, it is, I think, pending home sales. I'll double check. Let me check here. We have Wednesday. It is new home sales. New home sales, red folder news, 10 a.m. The market has peaked and then dropped. And we're sitting right in front of what I would consider my target, which is the daily. We came up almost to that daily. Remember how I said I wanted my target to really be, let me make sure, am I all up and running here? And I can't even get confirmation that everything's running. My audio's good. Let's try a refresh. Let's try this. Okay. All right, let's see. Make sure everything's working here. Yeah, let's see here. Live. Oh, I better go to YouTube. Let's see if I can find my stream on YouTube. There it is. Let's see if I can watch. Okay, I'm going to have to do it this way. I can see, good morning, John. Good morning. Glad to have you this morning. If you can, if as ICT would say, give me a 5x5 as make sure everything's working. Make sure you can hear me okay. If you can, give me a thumbs up. I would appreciate it. I just want to make sure that I'm not muted. All right. Market opens here in about 7 minutes. We're going to be watching the market. I don't know. I really want us to hit this daily fair value gap. Let's go to this daily time frame, and you can see right here we came up really close last night. Thanks, John. I appreciate it. And the market has not reached into this daily. Now, what do I know? I know for a fact we have obviously come into this daily fair value gap down here. Okay. This was Monday. Tuesday, Wednesday reached, and then where do we go from here? Honestly, it could be 50-50. We may be running into some consolidation, but if we've already grabbed previous day high and the previous day high, do we really want to run up there again? Maybe. We have previous day low that has not been ran yet, and the previous day low, which is sitting right there. I'm going to get rid of some of these extra nonsensical items. All right. I think where I'm at is I would take a long if it presents itself. And the reason I say that is if we go down to the 4 hour, the 4 hour right is sitting right here from this swing low to this swing high, which we left last night. Look where price has reached down to. It's reached down to this 4 hour fair value gap and equilibrium. We're at a place where I could see us wanting to turn back and start moving higher, but I think we're going to wait till news. And then we have this BPR sitting right here. This market maker buy model that formed right here. So with all of that, I think we have an opportunity still for us to reach this fair value gap, untouched daily fair value gap. I think that's my higher time frame consensus. We obviously will have a large opening range gap that's going to be sitting. That's going to be sitting here. As we'll see in 4 minutes, I'll pop that. So we have a tiny 30-second, right, sitting right here with these equal highs, which we stabbed through, and then we reached this high right here. But more importantly, I think we have some structure that's forming, which is a low high, lower low. So we have a breaker. We have a breaker here, and all of these highs basically are going to act as a breaker because we have this low, this low, this low, and this low made a lower low on all of them. But we're not going to take anything right now. Main reason is open is in 3 minutes. Now, if on open we come down and we reach down into this area right here, which this is a bullish breaker. If we reach down into this on open and find support here, I might look at that as a continuation higher. Let me change the color of that. Now, if it comes in too early, then that's going to suck. Let me drop this onto. All right, 30 seconds till open. I don't even have my copier open to be able to take a trade, guys. There's our breaker that it tapped us into right at the opening bell. Surprise, surprise. Okay, indecisive candle there. Well, I'm glad I'm not in it. I'll tell you that from this right there. I don't like taking things off the open like that. I'm gonna let it settle. $80 off Apex. Link is on the screen there if you would like 80% off. It's I think we're gonna probably hang out at 80% for a while. Well, they did a 90% sale for quite some time. I don't know why they would continue it unless they just are making tons of money off of those sales. MNQ. I'll be executing on my micros account, copying to 7 different accounts. I think I'm gonna add a eval account. I'm gonna probably copy on there as well. But we are doing 7 accounts on that. All right, so if we look right here, regular trading hours, what we're filling right now is that gap. We're filling this gap that's sitting right here. We've filled it about 50% so far, and we've hit roughly around these lows. And so it wouldn't surprise me if we get some resistance right there. How's the rest of your day, John? How was the rest of your day? I ended up doing some small scalps and was able to get my account back to break even as far as yesterday's loss went. I was grateful for that. I'm going to find the midnight open here real quick. So we got these previous week opening, new week opening range that we've seen. We have some equal highs there. We left those there. As far as downside move, we have this 5-minute that we reached into, as you can see right there in the pre-market. And then the only other thing below that, at least on a 5-minute time frame, is this swing low that's sitting right there. That would be some buy side liquidity. That was from yesterday's trading. So that was yesterday's purge lower in the PM session for a push higher. So we're just waiting for a premium type setup, something that shows us it really wants to start moving. I like how it supported this breaker again. But we don't have an inversion in here that I can play off of. So that would have been a plus setup for me if there was an inversion in here off of a breaker. That would give me more confidence to take it before news for this swing high and those equal highs. Maybe on the 30-second there's one. No, there's nothing on the 30-second either. So there's nothing there for us to look at. So for you guys that are just joining us, we are on the Nasdaq. We are trading the Nasdaq, but we are waiting for news. We are waiting for the news. We are not taking any trades before news unless something just really is wetting the whistle to give us inspiration that just is undeniably, or we can't say no. But I doubt that's going to happen, because discipline is discipline, and trading is a game of discipline, and those who follow discipline are going to see the results. So yesterday was it was 2 for 2 on the wins that we saw. I had a loss on there because I didn't follow my rules. Actually, I didn't really have a clear set of rules on that, and I defined those yesterday for those that want to know. On inversions, we will stop loss is below the inversion. So let me show you what I'm referring to. Let's say we want to take, let's go to a 2-minute. All right, so let's look at this inversion right here. We had this inversion play out right here. So this is a 2-minute inversion that played out. Let me zoom in. All right, so inversion, what do I mean by that? This fair value gap, this bearish fair value gap, was violated by a bullish candle. That right there, actually, that was a nice play. I just didn't see that on the 2-minute. This is why you have to thumb through the different timelines. But what in the rules are, when price comes down, if price was to come down from here and stops inside it and goes higher, that trade is still active. As soon as price closes below the fair value gap, you get out. Well, in this case, if you were to get in at the close of this candle, this would be a 6-handle stop loss. That's a tight stop loss. That's really nice. However, if price runs lower and then wicks back up, which is what happened yesterday, I got stopped out because it went to 17 handles below. So I'm making a new rule that if price hits, I'll have a hard stop at 15 handles. I'm going to have a hard stop at 15 handles. If price decides to go and wick below here, doesn't hit 15 handles and wicks back up and closes above this fair value gap's low, inversion gap, I'll stay in the trade. If we wick below 15 handles and then do the same thing and it's technically still a valid trade, I will be out, just because I do not want to carry the risk of more than 15 handle loss. If we wick down here, don't touch it, but close below this fair value gap, I'll be out, because the rule is a close below this fair value gap would be out. Now in this trade idea on the 2-minute, we didn't even touch this fair value gap, so the trade idea played out or to this high right here, and could be still playing out to these equal highs. Okay, so I think that's the rules that I'm going to be setting for myself moving forward, and we'll see what the market wants to do today. See if we get any opportunities to do some inversions. We will. There's no doubt. Inversions and breakers, they show up every day. 20 minutes till news. This is the sign of pre-news price action right there. See how that is? I don't like that. No, I do not. We will not trade in that. Now, I guess you could try, if you're a gambler, you could get long right here and sell right here. Get short right here, sell right here. Right? But you just don't know when it's going to break out. Because this is some good distance. That's 24 handles in 1 minute. I mean, that's a lot of volatility. No, thank you. I'll stay away from that. So the opening range gap is pretty much gone. I think it could still reach for these equal highs and close out this. So that's a trade idea, but with before news happening, I don't think that's going to happen here. This is the breaker. I should change that to breaker box. So there we go. We'll do that as green. BB breaker box. I should have done that before. So this breaker box is respecting these bodies of these candles here. 1, 2, 3, 4 times. We should run, if we're grabbing this right here, we should hit these equal highs right here. Good morning, everyone. If you're joining us for the first time, we're waiting for news, so it's going to be a little quiet for about another 15 minutes is my guess. And then we will begin to look for some trade setups and ideas. If you look on the 15-minute, there's a nice breaker that I like that's sitting right at midnight open. It's right here. You can see it on the 4 or 5-minute as well. So we have a high, low, higher high. Here's the swing low that we're talking about. It obviously already played out right here. See that? How we go lower, we purge higher, we run higher at 755. And then we begin our descent. This is common. You'll see a manipulation, a purge of liquidity. We have these relatively equal wicks right here, right here. So here's our We see price hitting those levels there. And then what does price do? It runs those, breaks higher, acts like it's going to go higher, and then just fades. And that would have been a 6-handle drawdown. 6-handle drawdown. And it ran into the consequent encroachment, or the mean threshold of the breaker body. Let's see if it... Yep. There's a good chance we're going to see this run up to this level, if not this level up here. So we should see price. There's no reason for it to turn around here. We'll probably hit this swing high, potentially run into this breaker. And my guess is that by that time we'll probably be closer to news. As we're waiting here, guys, if you have any questions, pop them in the chat. Love to go over anything as far as ICT content, ICT structure, order flow, ICT models, Model 22, breaker, inversion, fair value gaps. Any questions you guys have, my goal is to provide that type of content and help you become more profitable. That's the big goal. That is my primary goal on these live streams. And so if you have questions, drop them. Don't be shy. Question them like, why is this working? Why is this not working? I may or may not have the answer. I can't promise you that, but I will answer. I'll answer you. My coffee's extra hot this morning. Extra hot. All right, so we're about hitting that high right now. Let's drag this out a little bit. Let's see what happens right at. So there's a touch of the midnight open. Got 8 minutes left. So question for you guys. What do you think is going to happen? We just hit this breaker. If we decide not to stop here, where do you think it's going to stop? When you look at this right here. When you look at this right here, where do you think the point of resistance forms? If not here at the breaker. Okay? Honestly, this here, in my mind, besides these new week opening gaps maybe here, which still is in this full down closed candle, so these consecutive down closed candles, which you could find resistance anywhere in here as well. You have a swing high here, swing high here. But outside of that, honestly guys, look at this trend line. This is a retail concept. And what does price like to do with retail concepts? Trend lines. We call this a low resistance liquidity run. Low resistance meaning there is no fair value gaps or very minimal fair value gaps. I see one here that was already used once. I see one here that was used. The only one that hasn't been used is this last one up here. Untouched fair value gap. Everything else has been used or partially filled. So we should see, if it doesn't stop at this breaker, which we have a beautiful reaction right at that breaker. Beautiful reaction. We should see a continuation through this low resistance liquidity if we decide to want to break higher above that breaker. Now, an idea of what I would want to see is something like this. Boom. That's what I would want to see. Something like that. That leaves a fair value gap in here. A 1 minute fair value gap that we can break for an inversion through this breaker. Okay? That is really what I'm wanting to see. I'm not the biggest fan of this breaker at the moment. I mean, I like it. We absolutely could break it if we're going to go down, but my bias is long. Why is my bias long? Is because of this daily fair value gap sitting right here. I think that is going to be the target. This is going to be the daily target in my opinion, and that's what I want to see price run into. Four minutes till open, folks. 4 minutes till open. Never mind. We're at open. 4 minutes till news. All right, here's what I like to see. Do you see that fair value gap? It's showing up right there, guys. We just need news to not ruin it for us, which just happened. So news just happened. Now we want this fair value gap to break, or inversion gap to break, and then that will be our long entry. You guys seeing what I'm talking about? Give me a thumbs up if you're seeing it. This is a nice inversion. That's really what I want to see take place. Okay, 23. We're copying on my mini contracts. Okay. So target would be break even at this swing high, profits at this swing high. You could take, you could hold for these, or for this new week opening gap low. We have a swing high sitting right there. Equal high is sitting right there as well. So this is what I'm waiting for right here. I'm going to delete this, but take note that it's right there. 7 seconds.
Order filled.
I would call this closed on the tick, so it's subjective. I took the entry there though. Stops will be to break even once we hit this high. Drop in my stop loss
Order submitted.
and my target.
Order submitted.
So this right here, this close is on the level. So this is a subjective entry that I took based on momentum. I'm just hoping that we continue and we actually get an official close above this, above the box. We closed on that level. We want to close above it. So that's really what I'm waiting for. I did get in early, but I'm hoping that we get a close below before I would get stopped out on a close below this. So I would say a slight break of the rules as far as momentum goes. And we'll see if it works out in our favor here, though. My entry is right there. My entry is right here. Targeting right here. Stop should be moved to break even right now.
Order filled.
And there is my fill.
Order filled.
All right, I'm all out there at 18 handles. All right, guys, that was my wife. Sorry about that. But that is a nice win. Let's see, did we? And there we go. Guys, you can't get any better than that right there. let me see what happened here, because I'm out. Oh, you know what happened? I'm out because wow, look at, oh guys, I got to show you this. Okay, I got to show you this. This is, wow. Okay, this is indicative of this type of price of trading MNQU. All right. So, look at MNQ. And look at NQ. So when you heard my account trigger, it's because MNQ hit the high, NQ did not. That's why I got out early. That's why I was out earlier, because I had my stop loss sitting right here. So you're looking at MNQ. This is where I executed on. Let me I'll drop my executions on here so you know that it's just not random noises. Okay, I'm going to drop that on here. I'm out. I only do one. Right now I'm only trading one contract. So I wasn't able to hold any extras. But here's my executions. Okay. My entry was right here at 981. Right here. 981. So entry was right there at 981. 981.50. That was my entry. Stop would have been right there. And then my target was this high sitting right there. And my exit was 2050. And so that is 18 and a half handles. That was my only play. As you can see, guys, there's no other plays from this morning. That was the only play that we took this morning. Nothing else here, guys. Nothing else. Only play we took. And we waited for news. We had this purge lower. We had this nice inversion gap. And we played to the swing high. Okay? That was the play. That was the play. Did anybody else take that? I mean, 20 handles, guys. I mean, 20 handles is all I need. I only need 10. I only need 10. But when I am able to get 20, I'll take 20. I'll take 20. Now, what I think I'm going to do is I'm going to go to my eval account that I have sitting right here. And I'm going to look at, it got stopped out for whatever reason. It didn't get the full trade. So I'm actually going to focus just on my eval. You entered on the 5-minute. The 5-minute is right here, and 5-minute entry. I don't know where your 5 minutes at, actually, to be honest. But look at this right here. This was my idea. I put that on the chart. It's sat on the chart this entire time. We go lower, we go higher. We actually hit the low, just like I have here. Low, high, lower, low. Low, high, lower, low. And then we break through it. We come back down. We touch a little bit. We touch this bullish order block. And then we move higher. Now, I do think price will eventually go higher. I don't see any reason price stopping. So finding another entry for an eval account is what I'm going to be doing right now. I'm done on all my performance accounts. In fact, I'm going to close my performance accounts. I am 100% done with that not going to take a single thing else. I'm happy with getting 20 handles on 5 micro accounts, which comes out to be $200 per account. On 6 accounts, that's $1,200. I'll be building that up, and I'm building that up by now trading my eval account to get more funded accounts. So now we're gonna see if we can get, again, I'm just FYI guys, I'm gonna play a little looser with my eval account. I'm gonna play momentum. I'm gonna play price action. I'm gonna play what I see, and there's lower probability in that, so I'm putting that. I'm not a financial advisor. This is for entertainment purposes, and you guys get to come along and see what I'm doing here. So I'm gonna be doing one eval account, and I want to see, I would like to play that and get that passed today. Now here's a nice inversion. However, I don't think I would take this one because we would be running into that original inversion gap right here that we played off of. I don't like playing inversion into inversion, especially if we still have higher targets. And here we have this liquidity right here. Liquidity, yeah, that just looks too nice. I want higher prices. I think I'm sold on higher prices. And let's see. We tapped into that here. What you're going to see in the coming trades, coming moments, is not advisable to. It is not proper. We're just watching price action. Tag this fair value gap. I want to see it break. I'll look for a long if we break it. Deciding how much leverage I want to use. My issue with eval accounts is I want to over leverage them and I want to get them passed immediately. So I oversize and then it just bites me in the butt. I do not do that with my funded accounts. I mean, I'm doing 5 micros on my funded accounts. I'm doing 3 minis on my eval. Oh, crap. I see a 30-second here that is way more obvious than this 1 minute. Looks like I might get all that. Oh, oh my gosh. Did you just see that? It closed in there, so it's not stopped out. 15 is just under midnight open. Hindsight is 2020. I should have waited till we got this 30-second. That's what I should have waited for. This 30-second looked way better than the 1 minute. I just did not look at the 30-second. This is why you have to thumb through multiple timelines. We're going to get out there because obviously it was going to close below. John, when I trade evals aggressively, it screws up my head. Does it have a negative impact on you? No. I know that it's a game. It's a game for me. Now, my brother who started his trading journey the same time I did, I got him into it. He does not like he feels like when he trades eval accounts that he gets bad habits, which is a legitimate concern. It's something that's for real. You should really honestly trade your evals the same you trade your live accounts. So what he does is he full ports his evals for premium setups. And if it wins, it wins. If it doesn't, it doesn't. That's his mentality because he doesn't want to create bad habits out of that. I totally understand what he's saying. And I tend to think that that's the right way to go about it. The other way is to literally copy trade for trade on my pro account or on my performance accounts with my evals, and then just do a mini or just do one mini or two minis. However, I think individually you need to know yourself. You need to know how you are internally feeling when you're trading. And I would say if you are feeling like you're gambling, you should not do that. You should avoid the feeling of, I got to get it. I got to try to find it, which I've done. I've struggled with that. For me, I think finding it is what is teaching me. This is something I'm in the middle of right now. This is vulnerable here. What this is teaching me is being able to control my emotions on going back and forth. And when I'm feeling that tilt, can I walk away? When I'm feeling that revenge, can I walk away? When I'm up $500, $600, can I walk away instead of trying to push it to get it? Right? That is really what you need to be able to answer. And if you can, and you can handle it, I like this momentum here. I want it to break above this 30-second, and then I would look at this as an entry. But if it starts going without me, I'll take it for these equal highs. Now we're creating some low resistance liquidity. So what I would like to see is a stab below this, maybe hit midnight open, and then give me another one here towards the highs. So hopefully that helps, John. I totally get this. It can mess with you. You cannot, I repeat, you cannot trade an eval the same as you trade your funded. And you can trade your funded or you should, let me say, you can trade your eval the same as your funded, but you should not ever trade your funded the same as you trade your eval, unless it's what you're doing for your funded accounts. All right, so I like this stab of liquidity right there. I'm going to take a risk right here because I want these higher highs, and I'm going to see if we actually want to go higher. I'm looking this as a turtle soup. I'm taking this as a turtle soup. Stop would be right here. I'm going to put it below. I'm going to put it below the consequent encroachment of this fair value gap. And I'm looking at this to inverse right here. I'm looking at that to inverse. This is a eval account. I would never trade my funded account this way. Because the type of trade that I just took is speculation. I'm speculating that this stab below will take me to these highs. Now, it will be confirmed if we break above this. That's when the confirmation happens. Okay, so the confirmation is, do we break above this inversion? And if it does, then I have confirmation that we probably are running these. Now, as you can see, the problem is that your confirmation is ending right here. Right? So my stop's now going to be to break even, and I'm going to let this run. Now, I only need $3,000, and so I'm just looking at where that's going to be. I'm going to sell one there, and I have two left. My target to the upside is these equal highs sitting right here. Okay, so I have equal highs there. I had sold one already. Honestly, I probably should sell another one. I want to see if it holds this fair value gap right here. Okay, so right now I'm watching this fair value gap right here to see if it holds. I'll probably end up selling one more here if we can spike above this. That's my ultimate target. I don't think I need to get that high, to be honest, to get past, but we'll see. I'm not sure where I'm sitting right now. So 51 is where I'm at right now. I don't like these equal lows here. That means we're probably going to stab into them. If we make a new high, I will sell one contract. To be honest, I should have sold one up here in the first place, but I didn't get to it because it went really fast. Might get stopped out here, guys. That would suck. Lovely trade if I would have closed it, right? I'm playing for the pass, right? So that's why I'm still holding it. If we inverse this fair value gap right here, I'll actually add to the position, but we're probably going to get stopped out right here. All right, so there's the stop out. That sucks. Now let's talk about this. I should have taken profits. I tried to take profits when we hit this high, but because of just my fill, it got me here. And by the time that happened and I was putting my stop loss in, I missed this run higher. I should have took another one off right there, but I didn't. So I took one off, didn't take two. The other two got stopped out for about $20 in profit. This is a bearish setup, actually. There's a stab through. I'm going to sell there. So the bearish setup was right here. Can you see how more relaxed I am when I'm not trading my funded? I just don't care sometimes. I'm going to remove the execution so it doesn't get messy here. All right, so I went short right here. We had our short confirmation right here. We closed below it. And we had these equal lows here relatively. And I'm like, we're probably going to hit those, so I'll just take it for the stab through it and sell it. And that's what happened. Okay. Now, what does that leave us behind? It leaves us a breaker. We have this breaker right at midnight open. That is pretty. I like that. If we come back and we touch this at all, even if we touch this swing low right here, I'll go short. Okay? This low or this low, I'll take an entry on. I would love for it not to hit these lows before I get that entry. Okay? If it runs without us, it runs without us. I mean, I've chased stuff on my eval accounts, but I mean, I'm live in front of, I guess, there's only 6 people here, but still, it's 6 people that are watching my stuff. And right, all right, so look at that move here. Okay, now if you're asking me or you're thinking to yourself, man, if Tyler would have just held on to that, why didn't he hold on to it? Let me tell you why. Okay, there's an easy answer to that. 100% experience on why I did not hold. Where should have my entry been? My entry should have been here. This should have been my entry. I would have moved my stop to break even right there. And if that's the case, because I'm doing multiple contracts, I would have been able to sell one and hold for this giant move lower. I missed this, right? If I'm getting in short here, could I have moved my stop to break even? Absolutely. Absolutely, and I could have held it. However, when I take these, when I'm really close to a target, I'm going to sell on the push because so many times will I see price do what happened right here or right here. It wicks lower and then comes right back up and then it moves the other direction. I don't know if it's going to continue lower or if it's going to wick back up, right? I'm going to take the purge, sell on the purge, and be fine with it, right? And that's what I did in this case. If I was short here, I would have sold one and then held for the longer move, but I didn't need to. I didn't. That was a beautiful short play. That was a beautiful short play. Wow. Nice sweep of liquidity. Bodies closed below the highs. We inverse this. I should have gotten in right here, but I don't remember what I was doing. I should have got in there. Stop would have been set there. You could target these lows. So that's what I wanted to do on the long side, but apparently I wanted to do some manipulation. First 41 handles, I would have been funded right there, my friends. I would have been funded right there. All right, so there's an inversion to these highs there, but you got another fair value gap there. All right, so see all those? Yeah, I don't like that. You got fair value gaps here. I'm not going to take this long setup. You could move stop to break even and see if you can get this momentum. Let's see here. We just filled that. What does the 15-minute look like? 15-minute didn't stab into that bottom one. I'm going to look at this as a break. I'm going to look at this as actually a, I'm going to look at this as short. I'm going to look at it as a short. And the reason for that is this 5-minute closed and the 15-minute closed, and I see a change in state of delivery. I want to see us hit this level, these levels here, and I would look for a short with the risk that it just still wants to go higher. We did hit some key levels. We had this swing high on the 15-minute here. So we hit the swing high on the 15-minute. I'm being a little loose, guys, because this is an eval account. So we had this swing high sitting right here. Buy side liquidity, we ran that on the 15-minute. You see that 15-minute ran, and then the 15-minute closed aggressively lower, and we closed below below these levels. Yes, price could continue to go higher, but it has a change in state of delivery. It has a 15-minute liquidity grab. Those are the requirements that I look for that's what I look for my breakers, and it's all right there. There is a risk that we still want to run up to this daily fair value gap, but I'm willing to take some risks. I'm going to start with 2 contracts and see what happens with price here. Now, I've seen these before where they'll stab lower and then it starts to creep up and it continues to creep up. So that's why you want to have a hard stop loss and not just, you want to have a hard stop loss and not continue to move it. InterTrader, I agree with you 100%. I agree with you 100%. I want to see how this candle runs right here. I'm going to take 2 right there on that first stab and see what happens here. This is what I'm going for. This bullish breaker has these equal lows sitting in it. These relatively equal lows. That's my target. I'm looking this as a short-term market maker sell model. Initial consolidation, reaccumulation, smart money reversal, stage 1 distribution, running into these lows. That's what I'm looking at. Target would be here. Yeah, that's a huge win. If it was to play out. Now, I expect price to be lethargic around here. And now if we see some sharp aggression higher, I will get out. But I'm going to look at the closes. I'm going to wait for closes on these. I want to see where we close. because technically the breaker is this whole candle right here, and I'm on an eval account. So this, which one closed lower? They look about the same. This is the breaker block. That's the breaker block right there. High, low, higher, high, swing lower. Anywhere in this is considered still a trade. Now I'm only in 2 contracts. The last thing I want to do is get over leveraged here and put myself in a position where I'm not, or I become uncomfortable. And what I mean by that is uncomfortable that I could blow the account, right? If we go up to here, what is that? That would be, right, that's 15 handles. I'm okay with a 15 handle loss. That would be $600. That'd be a $600 loss. It would wipe my funds that I have for today, that I've made today. But I like this setup for sure. I do like it. And I like how it's stopping. So far, at least. So far, we've found resistance here. Or from us going higher. We've had wicks, but we've closed. We're not. Let's see. Where am I? There's the touch on the body. Let's see if we get a reaction off of that. All right, so we have these equal lows right here. I'm going to treat this as a market maker sell model, and if I don't get stopped out, my goal is to hold this till I pass. That's what I'm gonna do. And passing, yeah, what are we up? I just need what, $2,200. I'm doing some math here. So $40 per handle. So 2,200 divided by 40. That's 55 handles. 55 handles is right there. That's 55 handles. So I don't even need this low, so I'm just going to put this right there. That is what I would want to see hit right there. That is passing. Now I could make this shorter by adding another contract. I could. And I may add another contract if we inverse this this level here. I want to see how price moves. We've respected the consequent encroachment. I want to really see this break through this level, but I think we're going to be lethargic here. We have 5 minutes till the 11 a.m. macro beginning. So I want to see if price is in fact going to want to move lower. It's still, guys, it still could bounce here, and we could run up to the daily highs. So my trade could be invalidated here for sure. Easily it could be. The other thing I'll say, John, is this. In regards to trading your evals differently than your funded accounts, I believe that if you trade it correctly, you can build the strength to hold for longer moves. So this trade up here that I was right on, I was up like 25, 30 handles on, and I had two contracts come back to break even. I can do that with a eval account and learn to hold for these bigger moves because I don't have that strength yet on my funded accounts. I don't have that, especially with doing one contract. And with doing one contract, I really don't want to do that. I want to take my profits and get out. I'm happy with 10, 20 handles. But I can strengthen this ability to hold for these bigger moves and try to figure out what the bigger move is and then hold for it to actually see if it plays out with contracts on at risk, right? So I think that your eval accounts, if done correctly, can also help build that strength of holding for these bigger moves. And that's kind of what I'm doing here. We really need to see it break through this. This is the only fair value gap that will hold price and could push highs prior. So if price pushes higher, I'm going to sell one here actually. Just one more. And I'm going to hold one contract for right now because this is an area that price could really run through. And if we break through this inversion right here, that tells me we're running for those highs and I might close the position. I'm just reading price action right now. So if here is an inversion gap, right? An inversion fair value gap. If price breaks through this and closes, we're probably running for these highs and not sure if it wants to go higher or not. But see how aggressive that candle is? I do not want it to close above this. A close above this will be a close of the trade for me. So that's closed above. I'm going to close that because what is this play? What is this play? This play is an inversion to these swing highs. I'm not going to take the risk of holding through that and then a continuation higher. So I'll take that and I'll miss out on the big trade idea, even though it could still work, right? There'll be another opportunity that I can look at, and maybe it should have worked. Maybe we are in that sell model, and maybe I should have held it. But that's what I'm talking about. Building that strength tool and being able to hold through that is a strength that I need to build up, and I haven't built that up yet. So doing that on eval accounts helps me hold my trades a little bit longer because I'm not as emotionally attached to the outcome. Yes, I want to pass, but it's not like real money for me to now I'm anxious about not wanting to lose the $500 that I'm up. Hey, let's see the trade play out, see if I can get some more, right? I need to build that strength. And the main reason I'm considering that is because we do have this daily fair value gap that could be the draw on liquidity. That is my primary target, and we could actually hit that. So if we get a long play from this, I would look for it. Excuse me. All right, so we did hit those highs. Let's see if we want to get through this BPR right here. So I would have been stopped out on that from that short that I had, and it just wicked up and would have stopped me out there. All right, let's see where these bodies close, and if we hold these bodies, I might look for any re-entry on this breaker, because this breaker is still valid. But I need to see additional confirmation that we want to move lower. Ideally, I want a swing high put in here. So this candle, I want it to close below this high, and ideally, I would like it to close red. This 15-minute rebalance this area, and we could see it push through. So if we close above this, I'll look for a long to take 26 seconds. Target would be the swing high. Stop would be moved to break even fairly quickly just because of how high we are in premium of this leg. Because we are in premium right now. No close. No close. Get some new music here. All right, so we made a higher high. This candle made a nice displacement lower, but I'm not convinced because we have support here of a mitigation block. So mitigation is a low, high, higher low. With that green candle, that would be a mitigation block that is coming into. I bet you there's a 30-second, nope, 30 seconds closed. So we're going to pretend that this was just a manipulation lower, and we're going to see if it wants to run higher. Hey, thanks, Trades, for fun. I appreciate it, man. Thanks for joining, chiming in. 100% on that one. I want to give the logic behind what I'm doing. Sometimes there is no logic. Those are the ones you want to stay away from, right? We call that emotional trading. Emotional trading. We want to stay away from that crap. All right, here's, we may get a close above this. I want to see how we want to handle that. Now, I'm going to call this a B plus setup. This is a B plus setup. Why would I call this a B plus setup? The answer is easy. We're not grabbing liquidity. This run lower did not grab liquidity. This run lower is coming off of an imbalance. I want to see liquidity ran. This could be liquidity here, but if I'm going to take it, I should have took this play right here. This play would have been the play on this. We're obviously way too high for that. What I'm looking at is seeing this as a continuation for a bigger move. And we're in the 11 a.m. macro. So the chances of a move taking place is has a higher probability. I just don't know if it wants to be higher or lower. And I'm using this as my tool of saying, well, if it goes above this, I'm going to assume it's wanting to move higher, right? It could be wrong. It's a lower probability, B plus A minus setup. I'm going to do some more math. I want to figure out what 10 handles would be. Let's say 20 handles. 20 handles would be for a... I need 2,200. Roughly. No, I need 2,000. Roughly 2,000. Okay, so we'll go at I need $2,000 or $2,000 made on these accounts. So let's divide that by, what would be 3 contracts? 3 contracts would be $60. That would be 33 handles. So let's do 2,000 divided by 4 contracts, which would be $80 per handle. That'd be 25. So that means let's do 2,000 divided by 100. There it is. Okay. I mean, that was easy. I should have figured that out a lot quicker. So 5 contracts. So I think what I'm going to do is I'm going to find a trade that is going to give me 20 handles for 5 contracts. I think that's what I'm going to do. $20 handles, 5 contracts would give me a passing eval. So it could be a make it or break it type trade. We're going to see what happens. We just need to find a trade that could give us 20 handles. So 20 handles on this would be right there if we were to take that trade. And if we were to do a short trade, it's going to look something like that. So why do I have these on here? I'm going to measure out targets. I'm going to measure out targets for trade ideas to see if we get, so if we close below that, if we close below this level right here, where's 20 handles? Okay, 20 handles is right here below this. Right? Now, if we get a re-entry off of that, we inverse this right here. Oops. Did I do that wrong? I did do that wrong. Whoops. That's a short. Let's delete that one. Let's look for a long here. All right, 3 seconds left. I think I'm going to take this. There's 20 handles right there. Now, obviously, with 5 contracts, I do not want a 20 handle stop loss because that would blow the, well, it wouldn't blow the account, but it would hurt the account quite a bit. So we're just going to set it right here for right now. I'm going to clear up some of this stuff on this chart, guys, because it's kind of messy. Now, the downside to this trade right here is we have this fair value gap holding it down. We could absolutely not see this run higher. I took this because it was a lot of momentum lower and then momentum higher, inversing this fair value gap. That's the only reason why I took it, thinking that with that momentum, we could see the trade higher, and we are in the 11 a.m. macro. But a close below this, I'm going to be out. This is low probability. This is not even a B plus. This is probably a B minus. This is low. This is a lower probability trade. But I took it only and solely off of this momentum, thinking that momentum could carry me at least to this high so I can move my stop to break even. And as of right now, I'm wrong. As of right now, that momentum didn't carry me to these highs, which that's where I would have moved my stop to break even to protect my position. Yeah, I'm not liking how lethargic this is. I really want to see it start moving in my direction after we just tagged this fair value gap here in this candle. We just tagged it. Now I want to see it move higher. There would be a long opportunity right here because this is our low. This is our intermediate term low, short term low with a fair value gap right here. I want to see if we close below this, I'm absolutely going to be out. All right. So out on that trade, lost my profits and down about $700 below my opening balance. I said this was a B minus setup. I really was hoping that this momentum was going to take me to these highs to get me so I could move my stop to break even. This is why playing B minus setups is probably not the way to go. I would never trade my funded account this way. You can't do that. Okay, it doesn't look like it wants to go higher. It doesn't look like it wants to go lower. So between these two fair value gaps, I don't want to do anything else till we decide to move out of this area. Found support, found resistance. Are we going to find support here? Or are we going to break below it? See this red line, folks? See that red line? That is equilibrium from this high to this low. We're going to get some choppiness right around this area. So you can see all of that chop is happening in that area. We're running into premium, going into discount, running into premium, going into discount. It's just this back and forth action. And I need to see which direction price wants to go, because as you can tell, we had two opportunities that we watched. An opportunity for us to run first higher, it didn't. Then we took this play lower, and it didn't. Then we took this opportunity to run higher, and it didn't. And it's all because of these two fair value gaps. We need to wait. Yeah, choppy price action after a nice move in the AM session. You'll see choppiness in the AM session. The PM session will probably be more likely to run, but it looks like, I mean, I said that price is probably going to run here at the 11 a.m. and it looks like it is. So I'm waiting for a close, and I may run for these lows here. Let's see what happens. Oh, it locked. Oh, okay. Sorry, I can't. It didn't let me take that trade, guys. So it failed the account because I was up so high on this trade right here. I didn't take that into account. That sucks. All right, so let me explain what just happened here. All right, so you guys remember when I took this play long right here, and I was up like 80 ticks, 100 ticks or so, and I sold one, and the other two came back against me. And then the same trade here, I sold one, and the other one came back against me. Well, because Apex has a trailing drawdown, I probably came really close to that 5,300. And because I did that, but then came back down, my stop out position also increased. And so it increased here and got stopped out. So that was a blown eval account, because not because it was a bad trade idea, but because I let runners run higher and then they came back to break even. So now I'm in drawdown whatever it came back down to break even. That's that's another negative of doing these, This is why I should say, my brother wants to do the full port style, which you figure out how many handles it takes to pass, and then you set it and just let it run. Because once you do that, and then you do another trade, if it comes back to break even, you now are in drawdown, even though you're sitting at $50,000. You're still in drawdown by, let's say, $2,200, and you only have a spread of $800 to work with. Let's see if price wants to run. It's 11 a.m. We're finding support at the previous new week opening gap here. But we were playing in this on the eval account. Now, I would have never done this on my funded account. So hopefully you guys understand that. I've said it probably a dozen times by now. I mean, if you think about it, I just made $1,200 on my live account. I'm okay seeing if I can pass an eval account for $30. That needs to be understood completely. This short is still live. What is this short? I went short here. Close above this box would be an invalidation of the short. Target is this low. Break even will be at this low right here. Now that we have we went short here and we retraced, break even will be once we break below this low. So I'm going to play this out for you guys. Target would be here for a break even. And then you could target these equal lows down here that are sitting in this breaker box. Once we get below this new week opening gap low, stop will be moved to break even. Because at that point, we really want price to move. If it's going to stop at this consequent encroachment, then it'll stop us out. But we want to move our stop to break even sooner than later. Now, if you're on a cash account, all these trade ideas that I showed you that were stopped out at break even are totally fine. It's when you do these eval accounts with trailing stop losses that really affects. You just got to change the style of your trading. Right, you can't just put your stop to break even, let it run for 50 points because you're reaching for 100 and then let it stop you out. You'll blow your account until you get to your funded account and you have a big cushion. Once you have that big cushion, you can do whatever you want. But building up to there, you need to change your style of trading. And I just completely forgot about that. I was just trading based on what I was seeing. I don't like, this is a little dark for me. Let's do that. All right, stop's going to be moved to break even right now. If it stops you out, which would be, oh, we're not stopped out yet. Okay, we're stopped out right there. Stopped out. And that's why, because if we are going to run, I want to let it go. But if it's just going to do one of these wick craps that I talked about before, remember I told you I got in on this short right here, and then I just sold on the push through. That's great. I want to do that. That's an example right here again, how it retraced completely against you and it would have stopped you out because you have to move your stop to break even in case it just wants to run the other way. In this case, it may want to come back down, but obviously we got stopped out and we got to wait for our next opportunity at that point. The last thing I want to talk about here is what I originally talked about. That's why for my trading preference, stop, no trailing stop loss, good stuff, well done. So for Top Step has no trailing drawdown. Do they also, though, I think you have to pay like $200 for an account though, right? Which if you like that style of trading, moving your stop to break even, that might be a better option. You may not blow your account as much. I just like the low entry cost for Apex. And that's the main reason why I did that. But going back to here, originally, if you were to go back in the stream, you would see that I called this a market maker sell model. Okay. We took a short right here on this breaker. This is what you would want to do in your post analysis. Okay. We went short on this breaker right here. Right there. I went short. Now we got stopped out. right? I got stopped out because it would have ran to my 15 handle stop loss. Now, the thing I want you to see, look at this nice run here. Okay, this is just unfortunate because this setup right here on the breaker failed, but there's another model that I don't trade that showed up, and it was the model 2022. This is our high, low, higher high. It breaks lower, comes back up to the breaker, comes lower, that's your entry opportunity or your short opportunity, but it came back up for a second time and it reached into this fair value gap right here, acting as if it wanted to go higher, but guess what it was? It was a model 2022. So your entry for a model 2022 would have been at the consequent encroachment, and you would have been able to hold through this whole thing. Model 2022. I don't like the model 2022 as much. I think when it's right, it works and it works nice. I don't, look, it hit my target. That sucks. My breaker, sucky, suck. That's okay. Hey, I am green on the day, so I'm happy. But you can see how I see this model here. I had the trade analysis correct, but because I wasn't thinking model 22, when we broke above this, I was looking for a long here. It didn't break above that. So when it did this nice move and it inverted this, that's when I was looking for my long, and we didn't get that. That's because I missed the 2022 short. Now, what I'm telling you is what you should be doing every time you take a trade and you do your analysis to figure out, why did my trade not work out? Well, now because the trade has panned out, I can look at past price action to figure out, what did I do wrong? What should I have been more aware of? And for me, the answer is this. The answer is I should have considered this as a model 22 and said I should not take this momentum trade up to these swing highs because this could be the model 2022. And if it is the model 2022, we should see this fail. And if it fails, I could go short. That is my post analysis on this here to help me figure out what trade I want to take. So I can use this for future analysis. Next time a trade sets up and we see something like this right here. Well, cancel. And we see something like this. I can now say to myself, all right, I've seen this before. Here's our high, low, higher high. Here's our breaker. Oh, here's our fair value gap. I should call this a model 22 just in case it wants to come here. And if it comes back to the model or the 2022, I need to just be aware that that could actually play against me. And that's exactly what happened. So there's the model 22. We had our breaker sitting right here. Right? So two models, the breaker failed, the model 22 worked out. Okay? We had the right idea as far as a market maker sell model, and we saw price finish that. As you can see here, price begins to move lower, and it moved aggressively after it hit the model 22 level, right? So let's get out of that. And now we've completed the market maker sell model, and this whole trade idea is now completed. This was our cue that the market structure shift is happening. We came up to the breaker, it failed. I didn't see the model 22. If I did, I would have not looked for a long position here, which would put me down $2,200, and which was basically what blew my account, was on this trade idea right here. Blew my eval account. I'm up on my funded accounts nicely. So that is my post-trade analysis on how I could have done this differently. This is nice structure overall, guys. This is very nice structure. What I would be doing if I was you is I'd be putting all of these things on here, and I would be taking a screenshot of it and saving a folder for you to be able to review later on what a market maker structure would look like, so you can identify these in advance so that you're become more familiar with what structure looks like. Because I haven't spent a lot of time on the Model 22, I looked right past it because I'm constantly looking for breakers and I'm constantly looking for inversion gaps. So guess what? I've become very good at recognizing breakers and inversion gaps. And so right when I saw this, I'm like, this looks good. This is momentum good. I'm going to take this. But I missed this. And this is a model entry that works, and it works a lot. I just like the breaker inversion better, and I should have just paid more attention. So hopefully this post-analysis of this trade, even on these eval trades that I took, even though they were losses, we had some good trades here and here that just I held for longer trades and turned it out to be break even. I hope that this post-analysis breakdown helps you to be able to learn to recognize where the setups are and how to target your swing lows. This played out. It played out exactly what I wanted. I just missed it, okay? So that's going to be it for today, guys. I'll be here tomorrow morning, 8:20, I think is the times that I'm figuring out that 8:20 is the time that I really want to start. So I'll be here at 8:20. Come join me tomorrow. Thanks for being here, guys. If you like it, consider liking the video. I would greatly appreciate that. There's no cost. The only cost I'm asking is a second to click that like button and consider subscribing.